Today I wanted to cover off, how to actually buy investment property in Brisbane. I know this is a pretty vague question to ask, but a lot of people ask me this all the time. Being a buyer's agent, I've got a lot of friends and family that always ask me this question. So, in this video, I'm going to run through 4 steps that I go through with clients to help them work out where to buy, how much to pay for their property, and what style of strategy that they're going to do moving forward. But before I jump into that, hey, I'm Nathan from Invision Property, a Brisbane-based buyer's agent where I help time-poor families and investors buy properties across the Brisbane market, saving them both time and on average 40 to 50,000 on their property prices. So let's jump into it. To get started, step number 1 is get finance. So I know it sounds pretty simple, but a lot of people forget to go catch up with their mortgage broker or their bank before they have a chat with me. So step 1 is going to sit down with either your bank that you're with at the moment or a mortgage broker to map out a finance strategy or to get what you call a pre-approval. And the mortgage broker or the bank are going to sit down and look at your living costs, how much money you earn, and anything to do with spending money within your life. They're actually pretty thorough these days. So they look through all your transactions to see where your spending money is and also, what your spending habits look like. So I can create a whole video on this, but about making your account look appealing to a bank. But I guess out of this finance section, I want to just make the emphasis around using a mortgage broker because, when I went to go buy my first home, I went to the bank, they said no. And it was actually the bank I ended up going ahead with. And then I went to 2 other mortgage brokers and they said no as well. They couldn't get me finance. I then used the third mortgage broker I then caught up with. He managed to get it across the line. And I guess you call it creative financing, but he managed to get it through and the bank and the loan got accepted. And fast forward, it was a great step for me because I was able to buy that property and then get another property. But making sure you have a very good mortgage broker in your team is going to mean this part of you're getting your finance, you're going to get the most out of it because you'd hate to go through it and then you end up paying more with the interest rates or, you could probably borrow a lot more than another mortgage broker offers. So getting a solid mortgage broker in place will then get this part all sorted. So we know, number 1, what your budget's going to be. And number 2, what sort of interest rates are you going to have so you can look at your repayments down the track. So jumping on to number 2, which is really building out a property portfolio strategy. So I use a platform called Games Plans. You can use a spreadsheet, but it's really straightforward. Like what you want to think when you get to this point is you want to look at what budget do you have? And then, how much are you able to afford to pay for repayments? Where you're at with your life. I guess age is probably, something you can use as an indicator, but where you're at with your life. And then we've got 4 styles that you can buy. So you've got just purely cash flow, positive cash flow style properties. So these properties are ones that are yielding 6% plus. They're the compromises you don't get as much capital growth because they're a lot further out from the CBD. They're normally like regional towns. So that's your positive cash flow style. Number 2 is your capital growth and cash flow. So they're normally yielding around the 5%, but they're closer to your major cities. They've got a lot of existing infrastructure, and there's more parameters around growth in these areas, but you're going to be neutrally geared. The third option is just capital growth, and capital growth is like buying your inner city style properties, normally within 10 k's from a major capital city. There's a lot of infrastructure spending in the area. There's normally really good school catchments. They've got other sales in the area. Say you buy it for 800k, they've got sales in that same area for 3 million. And then you've got your fourth option, which is your advanced investing. So this is like properties that have development potential down the track, knockdown rebuilds, just a property that has another angle down the track. And this is for people that, do want to go ahead and maybe complete that, or they've got the skill set to potentially complete it down the track. So step number 2 is build out your strategy. whether it's going to be positive cash flow, capital growth, cash flow and capital growth and advanced investing. So, okay, we worked out, what style of property you want to buy because you've got a budget. So, for example, I've got a client at the moment, and he had a total budget of around 1.4 million. And what we done was we brought a capital growth style property for 700k, but it's only renting for 600 per week. That one's closer to the CBD. And then the second option we got was more cash flow style, and it was a duplex about 35k's from the CBD, but that's renting for 700 per week. So we're able to cover off two different styles, and then the yield was like around 5% across both properties. So that's a little example. Step number 3 is looking at location. So with location, you're really breaking it down into two parts. You're looking at the region, and then within that region, you want to then look at the suburbs within that region. But so when you're looking at a region, some things to look out for. So you're like, okay, I want to get a cash flow style property. So you want to look at the price ranges within this region, vacancy rates, population growth, economic diversity. So there, it doesn't just rely on a tourism, or there's a diverse economy, so there's plenty of jobs. Another thing you want to look at is existing infrastructure and the new infrastructure. So are there roads, schools, highways already available, and are they looking to bring in more infrastructure because of the population, the demand that's coming in here? They've got a lot of indicators showing that there's a lot of demand coming in, which is going to then push up prices. You also want to look at climate risk. So within Brisbane, climate risk could look like flooding. You've got areas that are prone to like tornadoes and things like that. But I guess that all comes under the climate risks. So within Brisbane, you can easily do a flood check to make sure that the property is not going to be flooded. Another thing you can look at for the growth area is rental growth. So, has this area showed just constant growth over the last 10 years across Queensland, probably across Australia? Rental growths have been crazy, but Queensland itself, the rents have gone up like 20% since the last 2 years, and it's sad, but the rents are growing here rapidly, and that's a good indicator for capital growth as well, and also getting a decent rental yield. And once you get crystal clear on the region that you're going to buy in, there's 50 plus suburbs in Logan itself, or Ipswich, or Moreton Bay. It's then narrowing down on the suburb. So what is the suburb you're going to buy in within this area that's going to give you that style of property? Might be capital growth, subdivision, or whatever strategy you choose. You then just want to look at just supply and demand without getting all data nerdy on you. Just looking at what sort of new builds are getting completed, and what stocks on the market, looking at how long the stock's been sitting on the market for a supply metric, how much stock's available, I guess, long story short. And then the second part to that is you want to look at the demand. So how much jobs are available in this area. You can get reports off Terry Ryder that really outlines the new job creations in the areas, and then you want to look at population growth, what are the estimates for the population growth in this area, and then what's the lifestyle there. Have a look into the area, really understand the local college, the local culture, and then look at new projects that are in the pipeline. And another very important metric is looking at vacancy rates and days on market. So you can get all of this information. There's H tags, Terry Ryder, there's Suburb Finder, RP Data. There's plenty of online platforms, but you simply just grab all that information, work through the data to work out exactly, hey, is this area somewhere that has growth parameters, and can I buy the style of property that meets my portfolio requirements in this area? So once you've got that down pat, I say you've got the area. What I then do is I grab I funnel all the options into one section and then start shortlisting the options. But step number 4 is in sourcing the deal. So as it's about grabbing all the options, throwing them into one spot, and just having a good, visual on, what's available, where they're at, prices, what a property's sold for, to get a really good understanding of the market. But to really, like, that's pretty straightforward there. But the what you want to do is, when you're sourcing a deal, you want it to be either a distressed listing, or you want to have the sellers motivated, like, because that's going to mean you're going to be able to buy the property at or even below market value. And yeah, I think, like, saying that property sell below market value, it sounds super crazy, but I've been doing this for the last 3+ years, and I've purchased over 60 properties, and I've purchased a lot of properties below market value, like a lot. So I'm 100% like very confident to tell you that you can buy a property below market value. I think the craziest probably story I've got is when last year I purchased a property. We've done it twice on the same street, but a block of units, purchased it for a client for 1.4 million. We then settled on the property, chucked it straight back on the market, and took it to auction and sold it at auction for 1.9 million. So this client didn't make in his hand, but it was like a 500k uplift in the space of like 3 months. But that's one of many stories. There was like, I even helped him, and these are all locals, his brother buy a property in a suburb called Mount Gravatt East. We brought it off market for 800k, and then he held it, chucked it straight back on the market, and sold it for 1.2 million. So yeah, it does happen. Like, so it's a matter of finding the deal. Now it's a bit of a changed market, so I've been buying a lot of properties that are on the market. So step number one is, identify all the options, and then what I call pipelining the options. So you're looking at how motivated are the sellers. You're going to have your buy-in price for the property. If it's not at your buy-in price, you have to be very strict and just stay on top of the property, because one or two things happen. They do go under contract. Cool, they went under contract. But if the contract crashes, they actually sometimes get really desperate because they've found another option, or in their mind they've already sold it, and that's when it's time to go in and just swoop up and pick the deal up at a very good price. Like, I guess the best example was one that I just got in a suburb, about 35 k's from the Brisbane CBD. The agent was 3 bedrooms, 1 bath with over 800 square meters, and all of the properties in that area were selling for over 500. This style of house, even on 600 square meters, but we wanted this one because it had room for a granny flat. So what I'd done was, kept following it up, and yeah, they got an offer at 510. But what happened was then I called up the agent, and that person that brought it, finance crashed. So what I'd done strategically was I then sent them an offer at 475, which was our original offer, but I said, we're going to withdraw our offer by 5 p.m. tonight. And what they've done was they put a lot of pressure on the seller. You just really have to time it right, and you got to really understand the situation. But because there was that pressure, they took our offer at 475, and then they were already on the back foot. Once we got the building and pest through, I was able to then negotiate another 10,000. So we got it for 465. But that's from what I call the strategies, pipelining the option, and just keep following it up. But there's pipelining and finding properties on the market, which is, I think people don't really understand the strategy side of negotiating. But it's not just a matter of putting in offers. You can be very strategic about it. And when it's an investment property, you can be even more strategic about it because you don't really need to buy it. There's plenty of other options. It's a matter of buying the right deal that you can actually get capital growth for over the long term. So maybe saying no to some deals so you can say yes to a deal where they really need to sell it could mean that you buy property and you already got 30, 40 grand of like equity in it. And that's going to increase, it's going to shorten the time from when you can refinance that property to get your next property. But the second option is finding off-market properties. A lot of people think, why do people want to sell off-market? But these are properties that are just about to go online. So they're what you call pre-markets, but there's actually proper off-markets. And the way that you find those is just contacting agents daily. Like I do texting, email blast to agents. But I found the most effective way to get these properties is through just straight up calling agents like every day, because they're just like any other person. We get our attentions get taken so quickly. So calling agents on a weekly, daily basis means that you're going to be front of mind. So when they get a deal that comes up, maybe John and Sally are now thinking about selling, and you call them up at the right time, they're going to say, "Oh yeah, I was talking to John and Sally. They're thinking about selling," and then you can get through that property and inspect it. And then once you go through and inspect it, you can then throw down an offer. And yes, they weren't really thinking about selling at that point, like they weren't 100% in it. But when you've got an offer in front of you, it's pretty hard to say no to money. So that comes up quite a lot, and you find a lot of deceased estates, divorces. It sounds really corny, but I purchased like so much last year of like deceased estates and divorces, and yeah, you get them because you're really solving a problem for them. Like, it sounds bad buying them below market value and like so cheap, but you're solving them a problem because, like, especially when it's property inherited, they got to split it between so many family members. Sometimes they don't really care that they sell it for a bit less. That means that you've got more room as an investor to do renovations and get the equity up a lot quicker and sooner. But yeah, there's so many situations where you can negotiate the price down like tens of thousands, hundreds of thousands, if you go through and you do step 4 correctly, which is that deal sourcing side of things. But if you want to get into the Brisbane market, I would just suggest, breaking down those 4 strategies. So number 1, getting crystal clear on your finances. Number 2, working out, hey, what strategy do I want? What style? What asset do I want in my portfolio? And then number 3, where can I buy this property that's going to give me that capital growth that I want, so I can actually leverage down the track. Not just the suburb that I live in. a lot of people just buy in the same area, and they don't really understand, hey, there's other areas that have more growth parameters. And then number 4 is deal sourcing. Like, hustle hard and negotiate with the agents, get the purchase price down. It's a big haggle, and if you do that, that's going to slingshot you forward with your investment journey. Because I guess I talk to a lot of investors that have done it wrong as well. Like, they've gone down that path of getting that house and land package and out in bloody Yarrabilba or something, like, where it's out in the middle of nowhere, and it's actually put them back financially quite a lot. So I really wanted to share this just to help and people that are trying to get into the Brisbane market, or just to invest in general. But if you really wanted some more info, go to www.invision.property, where you can book in a free strategy call with myself. I can share some other strategies with you, so then you can go off and give it a go and get that investment property. Or you could potentially be one of the small clients that works with me to get them into their investment property. But until the next video, thanks for watching.